The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
All right. Good morning, traders. Sorry for the delay. I'm back at home and I had a computer reset, so everything was a little slow getting back up and running. But here we are. Good morning, Koo. Love it. First one with enthusiasm. So appreciated. Good morning, Mark. Yeah, interesting what a few days can do for the psyche. Yeah, right? I agree with that. Welcome out, everybody, to the Tradespoon live trading room, where we've had an amazing week of daily interactions. That always makes me a little bit happier. Bob's teasing me. We had a fun afternoon session yesterday. It was a good time. Put some trades on. Oh, I love it. I love it. I love it. I love it. Good morning. Someone came in without a name. Good morning. Good morning, Phil. Good to see you. Thank you as always. Good morning, Charles. Good morning, Mario. Tremendous Thursday to you, Dennis. Bob, it's always good to have you. I love it. Thank you guys for the energy. You know that I appreciate that. It helps me try to keep my energy levels high. Let's talk about it. I am Scott. I'm the head trading coach here at Tradespoon. Been trading for a while, been teaching for a while. These are the disclosures. Be careful. Things can be risky. Trading options particularly. This is for education. We're not advisors. Have a plan. Stick to it. Manage your risk. Manage your psychology. And enjoy the ride. Okay, a horse with no name, right? There you go. Good morning to you, Bill. Gosh, it's so much easier when I have my two big screens than just one laptop. The economy faces a surprise risk as markets grapple with the bank crisis. I actually feel like things look okay as it stands now. We haven't heard of any other new instances of bank failures yet. The Fed is obviously tailoring their strategy to be more dovish now in recognition of the stress that the interest rates rising are putting on the banks. I mean, is it the Fed's fault or the bank's fault? It's clearly the bank's fault, right? I mean, come on. They had to know, as inflation was rising, that is the Fed's tool for countering inflation. So, if they're overweight in bonds that are losing value because whatever it might be, yeah, I mean, the Fed obviously is vested in these banks not failing, but yeah, that's I think on them. Good morning, Fred. Good to see you. Futures are up, so that's good. We're saying we thought there's a good chance we might still get a little bit more follow through. Our VIX is de-escalating. We've got technology looking strong and leading the way. We've got communication services and the consumer area. And consumer's interesting. Consumer is interesting because, I'm going back and forth between discretionary and non-discretionary. And to be perfectly honest with you, there are times where I look at it and I think, is this stock, is Costco defensive or is it possibly discretionary? There's plenty of discretionary in there too. Target, Walmart, same kind of things like that. How could so many bankers be so poor in their finance skills? Yeah. Right? Ask Wells Fargo. Did you guys see their $3.7 billion fines and remunerations for their ongoing, I don't know, would you call it predatory banking practice? It's crazy, man. They just keep getting caught with their hand in the cookie jar, right? Average Wall Street bonuses dipped 26%. No, I'm not going to feel bad about that. Let's see. What's the news? In case you haven't heard, your RMDs have been pushed back. That's right. 73 instead of 72 now for required minimum distributions. Schwab drops on downgrade. Oh, interesting. Futures rise after jobless claims, GDP data. So let's jump over to the economic calendar. Good morning, John. Yeah, trades we put on should continue moving. So we talked about an early bullish signal we got. That early bullish signal was enough to get into some bullish trades, and the next day it was enough to have me close. When I got the lower high on the VIX, I shut down my hedges. But we did have to kind of sit through it with any early trades, got additional confirmation yesterday. Honestly, there's a good chance there may be additional confirmation today on some new other trades. There were other trades that were setting up. Is the sound not good, Ted? Or not at all? It sounds great. Let me just make sure it's in and out. That's not great. Hold on. Perfect. Good, Henry says. Okay, let me see. Blue Snowball. No, I'm on my fancy microphone. Should be good. There's nothing I can do on my side. Mostly in? Okay, we're going to go forward with it. What do we know about the economic data? No, I don't know. The it's not like the GDP was that. I don't see how the GDP missing by a titch was that much of a. I mean, this is really just status quo. We thought 2.7, it came in at 2.6. We thought 195 came in at 198. I think what it's showing is that it's stable, right? It's stable. So the economy is growing. The employment situation is staying strong enough. We'll call it strong enough. Oh, thank you, Ted. Thank you for letting me know. Yeah, strong enough we can live with, right? It doesn't have to be where we're like, oh, this is the strongest market ever. We know it's not. We know inflation's running hot. We know there's still, there's just weird things coming out of. It's not just COVID too, right? We talked about this a little bit yesterday. For years and years, with interest rates as low as they were, we kept saying, it feels like something may be building down the road if and when interest rates do go back up. Of course, they had to at some point, and now they did. And we saw it. We're seeing it. Hopefully we saw it. Hopefully the other banks who maybe were in similar predicaments behind the scenes are taking steps to, address any weaknesses that they find themselves in around their bond portfolio and the increased interest rates. But overall, everyone's like, oh, it's so, we're going to have a recession. We had one. For me, we had one last year. We had a recession. We had a bear market. Those things happened. I don't know why anyone thinks we need more of that. Corporate earnings have been fine. Obviously, the tech is where and it's interesting because tech is leading us now. So it's like, okay, they've cleaned up their payrolls. Unfortunate for those on the wrong side of it, but now everyone's looking back like, yeah, it was a bit of a glut. They were spending, they hired a bunch and they just sort of, yeah. So again, that's on them. Learn your lesson. Run leaner. A great book if you're into it. And it was funny because I bought this book by mistake, but it's called Memos from the Chairman, and it's Alan Greenberg. And when I was early in my trading, I mean, I don't know when I bought this book, but it's been a while. I was thinking it was Memos from the Chairman, Fed Chairman Alan Greenspan, and I just didn't pay attention to the very last bit of the last name. But it was Alan Greenberg who ran Bear Stearns when Bear Stearns was good. He has a funny philosophy, and he talks about that, right? When times are good, run lean. So, not good. China and Brazil have reached a deal to trade in their own currencies, ditching the U.S. dollar as an intermediary. The Brazilian government said today Beijing's to salvo against the almighty greenback. Right, Bill? Yeah, I don't know. I mean, I think that it'll be interesting because I think that right now China's getting a little more desperate. It's interesting to see what will happen with that, but I don't know. I'm not too concerned about it yet. So where were we? Tomorrow, oh yeah, GDP. We got some Fed speak. Tomorrow we've got more. Personal income is expected to grow, but at a lower rate. Spending is supposed to be positive, but at a lower rate. So those are the first two things. Once again, that's kind of best case scenario is if income can grow still, if spending, sales diminish, but not like drop off. So they're still positive, but just less so. That's what allows inflation to ease at a manageable rate, right? And then we have more Fed speak. Okay, so that's today. I'm a little behind. Let me get cranking through here. SPY. So the model's gone neutral and saying that we maybe have one more day and then we may have a consolidation. Okay, we'll see. Even the consolidation looks bullish though, right? We have this, then we have a higher low. Followed by a higher high. So the timing may be interesting. Now, again, what we do know about the model is if the model says it feels like some selling is coming and then it doesn't, then we might get a couple extra days. Then it has a little bit of a pullback, and then this comes. So am I looking at this like it's a crystal ball and this is exactly what's going to happen? No. Am I looking at it to say this is how the algorithm is processing the current levels of supply and demand, and what is likely to happen? Doesn't necessarily mean it's going to go in this order. But yeah, let's be aware of the fact that the model is calling out a potential downward consolidation. Still overall looks bullish. QQQ. Saying it might just kind of go sideways, but still with a bullish tail, a bullish kick. DIA. Almost identical to SPY. And then lastly, the small caps. Oh, the small caps. Looking for some participation there. Oh, look at that. And look at that. What we've been saying is we would love to see some increased strength in the small caps, the little engines that could. And we're seeing it. The model saying, yeah, at this point, we maybe found this body. You can see it was grinding it out in here and then looking for something like this. If we get small caps and one more sector, hey, the market's got everything it needs right now, right? I have my sector charts up so that we can oops, this was supposed to be a different page. I've got my sector charts up so we can do that. Okay. So this is what we're looking for, right? This April, late March, April bump. We'll deal with May when we get there, right? Well, maybe if we get the rally in April, we'll definitely be thinking about an increased level of. I actually think that would be great. We're even in a new bull market, we're going to have those periods of sideways consolidation. May and June has such a historical tendency to be that. So just have your butterflies / now it would be better. This is what I'm hoping for. This is my wish list, is that this bullish rally is enough to get the VIX back down to a consistent place below 15. Right? We lived around 12 prior to the pandemic. We just haven't seen that come back, and I know it will eventually. It's just we still are. That's how I know we're still shaking off remnants of things that developed because of the pandemic. All right, let's take a look at what's going on. That's not it. Take a look here at a. That's, I think, what it looks like. I think those are hedges that I forgot to close. Oh no, I don't even know what that is. I haven't looked at this account for a little while. So this is just a. Yeah, no, this is not anything here. We don't have either of these. These are. This is where I was using a different live account and not this paper account that I sometimes use to teach with. I'm not sure what that is. Boar drill. Look at boar drilling. I was looking at this. That's an interesting stock. Oh, is Baba still going crazy? Woo! It sure is. All right, let's start on the SPY. We'll look at the VIX. We'll get to our watch list. Yeah, so there is some resistance here that we've seen before around this, 405 to 408 level. I got to tell you, if we're really going to get this rally, it would be fantastic if we could make it all the way to this like 415 level instead. Just kind of bam, 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 get it there. Oh, magic. And then it pulls back, makes this almost a cup and handle type formation potentially. It gets back up there, and then we see a little pullback. And then if it breaks that, there's the rest of the rally. Yeah, that'd be nice. I'd be open to that. I have no problem with that. DAL, the airlines have been hit and miss. Okay. So I've been wondering. Now here's the thing. We've gotten back to the prior high. So for me, but if you're looking at this as your consolidation, then you might say that's enough. However, I'm not buying 3 days into what's clearly a selling cycle. I need to be in on these days or not at all. Problem with those days were those were new lows. We had no idea it was going to get through the consolidation or up there. Ideally, if this gets us one more day and then, or two, then I get my pullback and then I get my higher low, let's go. Right? That's what I'm looking for. Okay. I appreciate you guys throwing symbols at me. The VIX. Oh, let's see how we're looking. Ooh, right to this level here. So obviously it's a bit sticky around 18-ish, 18 and a half. So maybe we get a little stronger and we push to it. Maybe it stalls out, little move up to 20, comes back down. Definitely seems to have de-escalated out of this bit of funk here. Got a little funky for a week, but we definitely ended up getting a lower high at this point. The lower high is what, right? All of my hedges developed from back here in this escalation, right? And if things got really nasty, you would have loved having those hedges on. But as soon as you recognize you don't need them, and you remember that we took profits too on some hedge. So not on the last bits, of course, but I think it's still, I'd have to look. I think the hedging for this entire, so the hedging was basically depending somewhere in this would have been the window of it. I would have to say at least broke even, if not, I actually think I would be on the profitable side just for the hedging. I have to look at it and tell if anyone was hedging during that time and you keep track of like your exact results from your hedging activities, let me know if you were up, flat, or down. I'm very curious because that's one of the things I tell people. You have to quantify your hedging independently to make sure that it makes sense. John said up a little bit. Yeah, that sounds about right. Okay. Let's get to the wall. Okay, we have a couple of positions that we put on yesterday. For those of you not in the afternoons, these were the ones that we decided that we liked the best. We'll start here and then go. So Amazon had a pullback and then it turned and we had the confirmation candle and we had the stochastics turning and we had the model in our favor. So multiple things. Dennis was skiing, not paying attention. Where are you skiing, Dennis? And how's the snow? It's probably better here. We like literally, it's going to melt in 10 minutes, but there's like literally a pile of half an inch of snow on my lawn, not the streets. It's too warm to stick to the street. Beaver Creek and Breck. I'm not sure where that is. To be honest with you, I'm not all that familiar with. It's like when you have what we have here, you don't really pay attention. Colorado. Oh, you just didn't make it far enough west. Just a little further. Okay. Amazon, we liked. The other one was our most favorite of chip stocks, NVIDIA. You can see what we're looking for, and it looks okay for now, right? It consolidated down. We got the turn, nice little flag pattern. Looking for something like this to happen again. We actually took a composite. This was the biggest move. We didn't ask for this, right? If you look, let me duplicate that. This move here was actually a pretty good size. So we're not saying, give me the biggest. We talked about greed yesterday. I said, I'm not greedy, I'm ambitious. You know, greedy would be, give me this whole move. That would be, I mean, geez, that's 10 extra points. That would be saying, hey, let's see if this thing gets to 310. No, it only did it once. But it did this move one, and it did it here and here and here and here, like 4 or 5 of those. So as you're building your swing trades, make sure you're looking back at when this thing moves. When this thing moves, let me activate this drawing here. You can see it worked there. That worked pretty well. Boom, worked there, right? This one was, iffy, but close. So there's 1, 2, 3, a fourth one that was kind of close, and a fifth one that outperformed it. I'm comfortable with that, right? All right. Let's go back to the list to see, is there anything that looks like it could fire today? Something's wrong. Where's my watch list? Oh, there we go. Get to the top of it. Alcoa. Yeah, I'm still, I mean, it's looking better. Materials are looking better. Looks like it could be a double bottom. I mean, it's right at the old high, but it definitely has broken its downward consolidation. Same thing, if it gets a couple extra days, that would be helpful. And then if it gets a higher low, then that pretty much opens it up. And that's one of the things we're looking for. If you know, tech and communication services and some consumer can lead, then everything starts getting pulled. There you go. Apple, we talked about the possibility of Apple, and you can see it gave the candle, but not the stochastics until now. Now the stochastics is firing. Adobe is still overextended. ADI chips, we went with NVIDIA, but ADI looks like it's trying to break out. ADI used to be one that I liked quite a bit. Archer Daniels is possibly breaking its consolidation range. AMD was one we thought about yesterday, definitely giving confirmation today. However, be careful. Of course, chips. Don't go throw 3, 4, 5 chips trades on. Maybe you would put a second one on. It definitely looks strong. I thought about it. Amazon, that's the one we're already in. AXP financials are not there yet for me. I definitely would like to see them. Same thing with Boeing. There's really just nothing you can do with that yet. It could be close. Let me draw some lines. If this is how you see the whoops, I missed it. Let me try again. If this is how you see the consolidation, you might think, hey, it's over. Then what? Higher low. I'm back in business. I would love to trade it again. I think it definitely could get bullish again. Baba is strong based on its reorganization news potential. Caterpillar, same as Boeing, trying to get moving, but still need to be patient with it. ConocoPhillips, oil is not there yet. So this is interesting. I'm kind of feeling the possibility of Costco. It broke its consolidation range. There it was, got up. Now it's been in the selling cycle, right? You can see that from here to here. This is the buyers have stopped. This is moving into selling, but it hasn't really dropped. And now all of a sudden we've got a pinch, and this thing has turned. I would say that's viable. I'm curious what Stella thinks about this one. What time is it? 7:51. Stella. Stella says she's like, not for me yet. I mean, it says bullish, but it's not showing a lot. I like it. I think that's on my list for today. DBC. I don't know. I think we need to. I need to see the higher low. Whether it's oil, DBC, or natural gas, I need a higher low. I need to see that the shift from selling pressure to buying pressure has completed itself, and I can't see it until I watch what the sellers do. Right? If the sellers come in weak, then we have an open door. John Deere. So Deere, Boeing, and Caterpillar all work very similarly in how they trade. So take your pick, but they all are in the same place. Maybe showing enough strength for the buyers right now to catch our interests, but then we need to watch the sellers to see if it's confirmed or not. Dow actually looks okay. Disney's trying. See, look at FCX. FCX looks pretty good, but there just wasn't enough consistency in the basic materials arena. FDX was one. This is one that I put on back in here. We had been talking about the fact that it gapped up on earnings. The sellers could not close it. Couldn't close it. They tested the old high. Old high becomes new low, right? And then it held, and then it turned. It's moving. It's moving slow, but it's moving. So FXI seems to be benefiting from Baba a little bit, but I don't know. We've talked about it. We've talked about how I feel about the Chinese stocks. Gold is actually looking like it possibly could make another run, to be honest. Goldman showing some signs of life, but there's just not enough here yet. IWM, same thing, signs of life, but let's not jump to conclusions just yet. So whoever brought up Delta, who brought up Delta? Ted. This is a good representation of the whole sector. It definitely has broken both the consolidation and the old high. I just need the pullback, and I would do it. Yeah, airlines are busy for sure. Okay, let's see here. Mark says, what about CRUS? Cirrus Logic. It was in a really tight basing range for a while. It's definitely broken out of that basing range. However, for me at this point, I would say it's overbought. I would want to wait to see the next selling cycle before I would commit to this. But yeah, I agree with you there. I believe it's a software company, right? Maybe, I don't know. Chips. Oh, chips. Okay, that makes sense. Did I say once I'm not a fan of closing one side of a spread? Yeah, I'm really not. When I take spreads together because of a volatility scenario or a time scenario that I want it combined. I mean, gosh, I don't think I've unwound. I don't think I've unwound a spread for quite some time. A lot of people are like, oh, if you start with this spread and then it goes the other way, you just have to do this. And I did do it then. So it's like, you don't do it anymore. Why not? Well, probably because my experience when I did, where it's like, you're like, oh, I'm going to turn around and flip the trade. And well, to flip the trade, you take a loss. And then if it whipsaws the other way, then all of a sudden your loss is dramatically higher than what you had planned for. And that is the concern. What about Google? What about Google? I have such a hard time ever calling it Alphabet. Same thing with Facebook. I feel like I just don't want to participate. Oh, yeah, that looks great. Right? That looks great. Now it's setting up. We're just waiting for the turn. I'll add Google to my list. We haven't watched Google for a while, but I like it. Alphabet soup. Yeah, there's that kind of cup and handle, right? There's cup or handle. I love trading into the handle, hoping it breaks the cup. Very nice. Very nice. MasterCard. Not yet. There's Facebook. I would say Facebook is possibly, I mean, that might be the signal. It had a little bit of a consolidation, 3 days. It's turned. Its stochastics is turning. Marvell looks okay. Microsoft is moving, but it never really was consistent enough. Apple was better, but we ended up going into chips. There's Netflix. We talked about Netflix. It's communication services moving higher. NVIDIA's looking good today. Oracle overextended. QQQ, I agree. Breaking out. Looking at some blue skies. Starbucks starting to show some signs of life. Drink a couple shots of espresso, ready to get going. Silver overextended. Semiconductors, we went with the individual, SPY. Tesla, I'm thinking of kicking off the island. I don't know what it is about Tesla. I don't like Elon Musk. There's just something about him that I don't like. It's so smug. It's so weird the names he wants to give his kids. His kids seem to hate him, so that says a lot. Oh, he has like 10 kids. I don't anyway. Natural gas. Look at natural gas. Like, well, I don't. Ted, I'm with you. No sorry necessary. He could afford 10 more kids. I don't know how well anyways. What's the plan for knowing when to take profits or loss on NVIDIA or Amazon? Honestly, it really, I'll go back to Amazon. Let me finish the list because I'm almost done. Natural gas, new lows. Eventually, there's going to be a trade here. I thought it was back here on this exact day, but it wasn't. I had to take the loss, but I'm ready. Read his biography. You'll like him even less. Nice. Oh, that's funny. Visa, not there yet. The VIX continuing to push down, but not that much. Financials, there you go. Signs of life, maybe coming back. Industrials, same thing. Okay. Things are looking up. Things are looking up Let's talk about Amazon or Nvidia. I don't think I have the line drawn on Nvidia or on Amazon. I'll go put it in so tomorrow we can talk about it. But as this is moving, it's going to get to a point. If it crosses the halfway point in there, I'll look to. I think I only bought just one yesterday when we put them on, but in my live account, obviously, I did more. When you have multiple contracts, it allows you to scale out, right? So that's what I'll look to do is probably book a gain somewhere in there and then see if I can ride the rest of it on up. If it falls off this track, right? So if it all of a sudden goes sideways and then sideways and then it drops, that's it. I'm done, right? It's got to stick to the plan. The plan is here. We've mapped it out. We know what a successful move looks like. I'm looking for it to move this way. Anything other than that is a deviation, and a deviation is going to increase the possibility that we shut it down. We'll talk about both of them tomorrow. If any of these that we looked at today give signals, we'll talk about those as well, and then we'll continue talking about them into next week. But the only way those last till the end of next week is if they're working. Bill, oh my gosh, I'm so sorry. It's like I read it and I'm like, oh, I'm going to respond. And then I forget to respond. I'm going to make a note to myself and I'm going to send you a response today. Yes, I read both. I just forgot to reply. I made a note. I will not be on the close, but I will be here tomorrow for morning coffee. Things are looking pretty good. I gotta say, I'm like, hey, all of a sudden it's like, okay, let's see if the market can pull it out and do something here. But there we go. It's a long day for sure. It's a long day. We'll see what it gets to. So, all right. Well, I will be here with you tomorrow morning. We'll wrap the week up. If anything did give a signal, we'll see tomorrow if there's a potential to enter a morning entry, a day after morning entry, and we'll go from there. So I hope everybody has a wonderful day. I will see you all tomorrow. And as always, happy trading.